Welcome, everyone, to a channel that is dedicated to uncovering the financial truths that the mainstream media often overlooks. And today, we are diving into one of the most explosive and unexpected financial stories of 2025 that is currently sending shockwaves through global markets and leaving seasoned investors and economists absolutely stunned. What you are about to hear is not speculation. It is based on concrete data and official movements that have created a domino effect across Asia and are now reverberating through Europe and the United States, fundamentally challenging our understanding of emerging market currencies and their role in the new global financial order. The Vietnamese Dong, a currency that many so-called experts had written off as perpetually stable in its low valuation, has just executed a maneuver that has completely blindsided the entire financial world, with its exchange rate experiencing a massive and unprecedented shift that is being described as nothing short of a controlled earthquake in the foreign exchange markets. This isn't a minor fluctuation or a temporary blip on the radar. According to live trading data and official bulletins from the State Bank of Vietnam, we are witnessing a deliberate and powerful recalibration of the Dong's value, a move that has immediate and profound implications for global trade, investment flows, and the very fabric of the worldwide currency reset narrative that has been gaining momentum for years. The catalyst for this historic movement, as confirmed by multiple financial wires and analysis from institutions like Bloomberg and Reuters, was a surprise announcement from the State Bank of Vietnam that outlined a comprehensive and aggressive package of monetary adjustments, including a significant widening of the Dong's trading band, a sharp and unexpected hike in key policy interest rates, and a clear signal of their intent to aggressively build up foreign exchange reserves to shield the economy from speculative attacks. This triple-pronged strategy, implemented almost simultaneously, demonstrates a level of coordination and confidence from the Vietnamese authorities that we have never seen before, suggesting that this is not a reactive measure to market pressure but a proactive, strategic strike to reposition the Vietnamese economy on the global stage. The immediate effect on the charts was pure volatility, with the VND skyrocketing against the US dollar in intraday trading by a percentage that hasn't been witnessed in decades, forcing major international corporations with supply chains anchored in Vietnam to immediately reassess their cost structures and profit projections for the coming quarters. But to truly understand the magnitude of what is happening, you have to look beyond the charts and into the strategic context. Vietnam has been meticulously preparing for this moment for years, building a robust manufacturing base, securing critical trade deals with every major economic bloc, and maintaining a political stability that is the envy of many other emerging nations. This currency move is the financial equivalent of a nation declaring its economic sovereignty and its refusal to be sidelined any longer. And the timing is absolutely impeccable because it creates a powerful synchronicity with the long-anticipated revaluation of the Iraqi Dinar, creating a dual-engine effect that is propelling the entire global currency reset theory from the shadows of online forums into the glaring light of real-world financial headlines. The parallel between the Vietnamese Dong and the Iraqi Dinar is not a coincidence. Both nations are undertaking profound economic reforms mandated by international bodies like the IMF. Both are moving to untether their currencies from decades of artificial suppression, and both are seeing their central banks take decisive, unilateral action to capture a fair value for their assets and labor. The shockwave from Vietnam is so potent because it validates the entire premise that underlies the Iraqi Dinar investment thesis, that structurally undervalued currencies, given the right political will and economic conditions, can and will undergo significant reappraisals to reflect the true strength of their underlying economies. Imagine the trillions of dollars in global capital that are now scrambling to reallocate assets, with fund managers who once scoffed at the idea of the Dong or Dinar suddenly facing a brutal reality check as their models are rendered obsolete overnight. This is a paradigm shift, a change in the very weather patterns of global finance. And if you are not paying close attention to every development coming out of Hanoi and Baghdad, you risk being left behind in what could be the most significant wealth transfer event of our lifetimes. The narrative that emerging market currencies are merely speculative toys is being dismantled in real time, replaced by a new reality where national economic strategy, geopolitical ambition, and raw market force are converging to create opportunities that were, until this very day, considered impossible. Now, let's pull back the curtain even further and examine the intricate machinery behind this seismic shift, because the State Bank of Vietnam's decision wasn't made in a vacuum. It is the culmination of a meticulously orchestrated economic master plan that has been unfolding for half a decade. And the data points to a nation that is strategically positioning itself not just as a regional manufacturing hub, but as a future financial powerhouse capable of challenging the established order in Southeast Asia and beyond. The foundational element of this entire move rests on Vietnam's staggering trade surplus, which has consistently smashed records quarter after quarter, ballooning to an all-time high that has flooded the economy with foreign currency and fundamentally strengthened the nation's balance of payments to a point where maintaining an artificially weak currency was becoming more of a liability than an advantage. This massive influx of US dollars, euros, and yuan from exports in electronics, textiles, and agricultural goods created a powerful underlying pressure for the Dong to appreciate. A pressure that the central bank had been diligently managing through market interventions. But the cost of those interventions, essentially buying up foreign currency to suppress the Dong's value, was becoming unsustainable and was fueling domestic inflation to worrisome levels. The critical trigger for this week's announcement, beyond the trade figures, was the latest inflation data, which showed consumer prices accelerating at a pace that threatened to erode the very purchasing power gains that have propelled Vietnam's domestic consumption story, forcing the hand of policymakers to choose between continuing a weak currency policy that benefits exporters but hurts everyday citizens, or pivoting towards a stronger currency that tames inflation, increases national prestige, and boosts the real income of the population. They chose the latter, and in doing so, they have sent an unequivocal message to the world that Vietnam's economic priorities are maturing, focusing now on stability, buying power, and long-term sustainable growth rather than short-term export advantages. This strategic pivot is perfectly aligned with the ongoing and highly publicized reforms in Iraq, where the government is similarly wrestling with the paradox of being an oil-rich nation with a currency that doesn't reflect its potential, and the simultaneous movement of these two distinct economies is creating a powerful feedback loop that is capturing the attention of every major hedge fund and sovereign wealth fund on the planet. The intelligence coming from financial institutions in Singapore and Hong Kong indicates that smart money began positioning for this event months ago, with sophisticated investors decoding the subtle signals from both Hanoi and Baghdad, such as the rapid buildup of gold reserves, the tightening of banking regulations, and the quiet but steady settlements of international debt obligations in advance, all classic precursors to a major monetary reset. The real genius of Vietnam's timing, however, lies in the current global macroeconomic environment, with the U.S. Federal Reserve signaling a potential pause in its interest rate hiking cycle and a general weakness in the U.S. dollar index, creating a perfect window of opportunity for emerging markets to assert their monetary independence without the immediate fear of catastrophic capital flight. By acting now, Vietnam has not only stolen a march on its regional competitors like Thailand and Malaysia, but has also effectively created a new benchmark for what is possible for reform-minded economies, demonstrating that with disciplined fiscal management and a clear strategic vision, a nation can graduate from the category of a developing market and demand to be treated as an emerging financial center in its own right. The immediate ripple effects are already being felt, with the Malaysian ringgit and Indonesian rupiah experiencing sympathetic upward movements as traders bet on which Asian currency will be the next to undergo a similar revaluation, creating a contagion of strength rather than the traditional contagion of weakness that usually plagues emerging markets. This is a complete reversal of the 1997 Asian financial crisis playbook, where now strong fundamentals are creating a virtuous cycle of appreciation and investment, and Vietnam has positioned itself as the undeniable leader of this new movement. The narrative that this is merely a technical adjustment is dangerously simplistic. This is a profound geopolitical statement, a declaration that the era of Western-dominated currency valuations is facing a formidable challenge from a bloc of nations that are now confidently writing their own economic rules. For the millions of people who have followed the Iraqi Dinar story for years, the events in Vietnam serve as the most compelling and tangible proof of concept that the core theory of a global currency reset is not a fantasy, but a plausible, data-driven financial phenomenon that is unfolding in real time, validating the patience and conviction of those who understood that global economics is ultimately a cyclical game where undervalued assets, given enough time and the right catalysts, inevitably find their true and fair value. So, the critical and unavoidable question now is what happens next, and, more importantly, what you should be doing about it. Because this story is far from over, and the initial shockwave from the State Bank of Vietnam's announcement is merely the first tremor in what is likely to be a prolonged and volatile period of realignment that will create both staggering opportunities for those who are prepared and devastating losses for those who are caught on the wrong side of history. The immediate future will be defined by a fierce battle between the market forces, which are now voraciously betting on further appreciation of the Dong, and the central bank's stated goal of maintaining stability, which will lead to a period of intense volatility with sharp pullbacks and explosive rallies that will test the nerves of every trader and investor involved in this space. We are already receiving reports from our sources in the Forex trading communities of massive orders being placed and canceled within seconds, with liquidity drying up at key levels as market makers struggle to find a new equilibrium for a currency that has broken free from its decades-old trading range. And this chaotic environment is a breeding ground for both monumental gains and catastrophic losses if you are not extremely disciplined and well-informed. The next 72 to 96 hours are absolutely crucial, as we will be closely monitoring the official foreign exchange reserves data from Vietnam to see the true scale of their intervention, and any significant drawdown will signal that the central bank is committed to defending this new higher ground, effectively drawing a line in the sand for the Dong's value. Simultaneously, all eyes must now turn to Baghdad with even greater intensity, because the reform program for the Iraqi Dinar is now operating under a completely new and pressurized global context, where the success of Vietnam has set a powerful precedent and raised the stakes exponentially for the Iraqi government to deliver on its promises of a stronger, internationally recognized currency. The pressure on the Central Bank of Iraq from the international community, particularly from the United States Treasury and the International Monetary Fund, will now intensify, as they will be expected to follow through with their own de-dollarization policies and currency reform measures to avoid being left behind in this dramatic reshaping of the global financial landscape. For you, the astute observer and potential investor, this means that passive watching is no longer an option. This is a dynamic, live situation that requires active analysis of every piece of emerging data, from the minutes of the SBV's policy meetings to the latest inflation figures out of Iraq and the weekly oil production reports that directly impact Baghdad's fiscal health. The single biggest mistake anyone could make right now is to fall for the sensationalist headlines or the fear-mongering from mainstream financial pundits who have a vested interest in maintaining the status quo and who will inevitably dismiss this as a temporary anomaly. The underlying macroeconomic data, the strategic geopolitical moves, and the sheer volume of capital now flowing into these markets tell a completely different and far more compelling story of a permanent structural shift. This is not just about making a quick profit on a Forex trade. This is about understanding a fundamental realignment of global economic power and positioning yourself to benefit from a long-term trend that could redefine the meaning of value and wealth in the 21st century. The convergence of the Vietnamese Dong and Iraqi Dinar stories represents a rare moment in financial history where individual investors have the chance to witness and participate in the rebirth of national currencies, an event that has historically been the exclusive domain of central banks and elite financial institutions. Therefore, the action you take today, right now, will determine which side of this historic wealth transfer you will find yourself on when the dust finally settles and the new financial map of the world is drawn. If the prospect of navigating this once-in-a-generation opportunity excites you as much as it excites me, then you need to be part of a community that is dedicated to cutting through the noise and delivering the raw, unfiltered truth. This is where you need to make a decision. Will you be a passive spectator? Or will you take control of your financial future and equip yourself with the knowledge to act? If you are ready to take that step, then I need you to do 3 things for me right now. First, smash that like button on this video because it tells the YouTube algorithm that this is critical information that needs to be seen by every serious investor out there. Second, subscribe to this channel and hit the notification bell because we are your front line for this ongoing story, and we will be breaking down every new development, every data release, and every strategic move from Hanoi and Baghdad in real time with unflinching clarity and depth that you simply will not find anywhere else. And third, and most importantly, I need you to share this video with everyone you know who is serious about understanding global finance. Because we are building a community of the informed, the prepared, and the proactive. And the conversation we are having in the comments section below is just as valuable as the video itself. So let me know your immediate thoughts on this Dong and Dinar development down below. The financial world has been jolted awake. The rules are being rewritten before our very eyes, and the time for decisive action is not tomorrow or next week, but this very moment.